Hi, and welcome back to my channel. We've got a lot to talk about today. Of course, we're going to talk about solar stocks and why I'm thinking about ditching Vivint Solar in favor of Enphase Energy. But before that, we have to talk about the stock market in general and what's been going on this week. So here today, we can see market surge as massive economic stimulus plan takes shape to offset coronavirus. Dow rises more than 1,000 points after a volatile session, shaking off Monday's beatdown. We'll get to it later. My portfolio has been ravaged, destroyed, but the big news today is that the president and really the entire government has looked at ways of offsetting what's going on right now. And the biggest thing that they're looking at is literally sending checks to people because they're not able to work at all. So here they talk about this a little bit. Dow Jones jumped 1,000 points, S&P 500 up 6%, NASDAQ up 6%. Volatility shows the desperation on Wall Street to find fair value. Really, the things of note here is that they're talking about the market as a whole, what to expect, kind of these bigger topics. So we can see starting Tuesday, the central bank will buy significant amounts of commercial paper, short-term loans on which businesses rely for funding to pay bills and other expenses. The Fed did the same thing during the Great Recession and ended up buying $350 billion worth of these loans, or 20% of the market. They said, we're looking to send checks to Americans immediately. And here they're saying in the next 2 weeks. They're talking about checks upwards of $1,000 per person, except people in the highest tax brackets. So here they said Boeing and McDonald's were big losers. They said McDonald's, the fast food giant, expects to take a hit because nearly all of its franchises are operating only drive-through, takeout and delivery services. I did see their stock tank 16% yesterday because of that. They said the decline of Boeing, once Dow powerhouse, in some ways reflects the fall of the bull market that ended last week. $125 a share. It was trading at a fraction of 400 it commanded a year ago before problems surfaced in the 737. That really doesn't have a whole lot to do with the market. I'm not sure why they threw it in there. They said oil prices continue to bleed, dropping further below $30 per barrel and threatening to send American shale companies into bankruptcy. Again, the big problem here is the sell-offs and the fact that people are literally not able to work. So here, they say when asked if there was a 100% chance of the U.S. economy tipping into a recession, as some economists have predicted, Trump said it may be. Ratings company S&P Global is now forecasting worldwide recession this year with global GDP growth of just 1 to 1.5% in 2020. Not good, but I tend not to be a pessimist, and I don't think it's the end of the world. So we'll get started on talking about my portfolio. And if you've enjoyed this video or any other that I've made, feel free to subscribe to the channel, like the video, and let me know what you want to see next. Thanks. So I am down to $27.50. And I did input another $100 last week. So my total investment in the portfolio is $3,700. Yes, I am down almost $1,000. It is horrible. I bought 1 share of Realty Income, or O. I bought 2 shares of Verit. We'll talk about why that's such a big one. And about $25 worth of Bitcoin, which has also been demolished by what's going on. But on the day, we can see down $20, not too bad. It really wasn't down. I'm not sure what Robinhood's weird glitches are, but we can see as of last night, I was down further than I am right now. So again, not sure what that's about, but down 19% on the week, terrible. Past month, down 1,300. Over the past 3 months, down 930 or 25%. The past year, down 25.5%, and all time down 25.5%. As we can see, it was chugging along here. And I was up $440, and now I am down almost $1,000. I was actually down over $1,000 yesterday, as you can see, down $1,034. It is what it is. Markets have been horrible. We're going to keep running with it. But the big reason that you're here, what has been going on with Vivint Solar? Down to $434 a share. Total return is now down $117 with an average cost of $7. Look at the last month, down 61% in the last month, and even we can see this peak here of $12.78. I was up over $200 on this. Over the past 3 months, down 44%. Over the past year, down 15%. And over the past 5 years, down 62%. The problem here, a combination of things. Number one, their last earnings call was abysmal. As we can see, their earnings was trending upwards. They were in a decent position, missed that last earnings expectation, and because of what's going on with coronavirus, the supply chains are not really where they should be. Things are falling behind, and that earnings call has made a lot of people really frustrated. I think the solar industry has been hit especially hard because this is not a need really for people switching to solar panels on top of their houses. That's more of a luxury, something that people want to do, and they're going to get hit hard in the first place. They're still losing money. They have a lot of debt. So I missed the boat on this one. I had made pretty good amount of money, but now we're seeing that downward progression. So what do I think of instead? Enphase Energy. Here we can see trading for about $28. And I do have to give credit to quite a few people who have recommended Enphase Energy on this channel. It's something that I wish I would have seen sooner, but I think they're in a much better position than Vivint Solar to do well in the future. So as I said, up to about $28 right now. They are down 37% on the last week, but everyone's been crushed. And like I said, solar has specifically down 31% on the last month. They're still up in the past 3 months. That tells you how well they've really been doing. And as we can see, that spike had to do with their last earnings call, up 200% on the last year. Over the past 5 years, up 110%. So what's this about? Well, we can see, look at these earnings expectations. We're steadily climbing. And in a lot of cases, they beat their earnings expectations. So when we're talking about moving upwards like this, it's not super common. They've been able to leverage their debt very well. They're getting rid of that debt, paying it off. They're making a lot of money. So this is definitely a good stock to look at. And I do have something pulled up that's very interesting. So here we can see the 70% buy rating. And here's an article from today, actually. They said, sustainable energy, powerful upside, unfairly punished. So the big points that they make here is that they have been unfairly punished by the recent market turmoil. That's a big point. Now could be a great time to buy because everything's been hit extremely hard. They said business has exceptional ongoing growth opportunities and the shares have room for multiple expansion. Enphase is well positioned to leverage long-term secular growth in solar energy adoption globally over the next decade. So when all these things are put together, they are basically saying this is a good stock that's just been hit pretty hard by what's going on. And it doesn't mean that this is a bad stock. So we'll skip this. Basically, they're talking about micro inverters for solar panels. And basically what that means is that they invert the energy on each panel as opposed to for the entire array. I don't find it particularly interesting, so we'll skip that. But here is where it's really interesting. So residential cumulative capacity addition. So this is how much energy, or really how much energy's worth of solar panels are being installed every year. So 2012 we can see 450, and then 2019 14,000. That is incredible, huge growth. So they say since 2012 the U.S. residential solar segment has added over 14,300 megawatts in capacity. Enphase expects the global solar residential market to grow at 10% annually until 2022, while the microinverter market is expected to grow at 20% until 2023 as a result of share gains from traditional inverters, as well as underlying increases in solar energy adoption. So this has been very good. They said while solar energy hasn't been strong in the US, rather growth has been strong, Enphase's journey has not been linear. So we can see their revenue and year-over-year growth has trended upwards, but their profit margins did sink for a little while they took on that debt. And then as we can see, over the past 3 years, they've been able to really increase that a lot. So there's a lot of good things going on. Here they talk about more specifically what Enphase Energy does. I'm not super interested in that. I care more about the balance sheet. So here we can see cash flow. 2015, 16, 17, all negative. And of course, right now, after fiscal year 2019, they've got $124 million in cash flow. And in times like right now where they could potentially be losing money, the ability to hemorrhage that money is really big. It sounds crazy, but just having cash to burn can be really good in really what looks like a possible recession. So price to sales trend, SolarEdge is another stock basically that they want to be compared to. Enphase is beating them in price to sales. So there's a lot of things going on here, but we'll get to the conclusion. Enphase's transformation into a technology-driven home energy management solutions provider, coupled with the company's significant market share in the growing solar energy industry, makes for an outstanding investment opportunity. Further, recent market turmoil makes Enphase worth considering among our top coronavirus opportunities, as the company is well positioned to experience profitable growth, and its valuation has become exceptionally attractive considering the growth in multiple expansion opportunities. So what they're saying here, buy. good buying opportunity. So I'm not sure if I'm going to hold on to these shares. I think they've dipped so much that I might as well. I really don't have a whole lot more to lose there, but we'll get to my portfolio as a whole. So we can see PowerShares as SP 500 or SPHD. This could be an interesting buy opportunity because it's sunken down so low. It's now paying at about a 6% dividend, this of course being a monthly dividend. It's been crushed, but I think that it's down so low it really can't go down any further because those dividends are so valuable. So we can see down 30% in the last 3 months, just like the market, down 27% in the last year, and actually down 3% over the past 5 years. It hasn't performed exceptionally well, but it does pay that very consistent, very high dividend. So definitely a company that I'm considering purchasing. Let me know what you think, if I should continue to do that. Coca-Cola is an interesting one because they've been hit hard, but a lot of analysts are saying that this could be decent for the future just because in the case of a recession, they struggle, but not nearly as much as other companies. People still buy sodas. Of course, they have now extended into not just soft drinks, but teas, lemonades, juices, energy drinks, a whole variety of things. And of course, again, dividend king here. In a recession, that dividend can be very, very nice. So as we can see, struggling over the past 3 months, up a tiny bit over the past year, still up 15% on the past 5 years. But again, I look at this as a buying opportunity. VTI will skip. That's going to track the whole market. Vivint Solar we just talked about. Microsoft has struggled a little bit, but I'm not horribly concerned about them. I think that the tech sector is going to be hit hard. Microsoft I'm still up on, and it was a good buy. Realty Income. I did buy a share of this actually on Friday, as I mentioned. The problem here is that they have been destroyed. So $55 now, down 20 on the past week, or down 27%. Over the past month, down 32%. Over the past 3 months, down 23. So as we can see, they really did have a pretty good growth trend here going, and then just got crushed really hard. This pays a monthly dividend as well. I'm really not sure what I want to do, if I want to continue to buy or sell, but let me know what you think here. Just a lot going on in the market. Agilent, they've struggled, not too bad. I'm not concerned with that one. AT&T is an interesting one. They haven't been hit super hard, just because people have cell phones. Whether or not the market is going great, whether or not people are making a ton of money or a little bit of money, they're still going to use their cell phones. So this one's been good. Pfizer is an interesting one because depending on what happens health-wise or in terms of coronavirus, could be good. I'm not super confident in it in the long run. Verit is another one. This is my biggest REIT position right now. I do like this one. This pays a constant dividend of 0.1375 or 13.75 cents every quarter. It's constant, it's guaranteed. So the interesting thing here is that with the price being hit so hard, it's actually paying at a dividend yield of over 8% now. These REITs have certainly been hit very hard, but I think I am going to go ahead and buy more because, like I said, the market's been crushed so bad, I'm not sure how much lower it can go. Of course, I could say that and it could get a lot worse, but I'm not confident that'll happen. Down 34% in the last year, down 36% on the past 5 years, but as we can actually see, they're down 46% in the last month alone. So there's a lot of things to consider. We'll just run through these real quick. Sony hasn't done well, they haven't done horrible. Walmart's an interesting one. We'll talk about them next week because they've been almost unaffected by this. Logitech is down a little bit. Charles Schwab's been destroyed. Four Corners Property Trust has been destroyed. KeyBank has been crushed. Corning has not done well, but not the worst. Penn's an interesting one. This is Barstool Sports, their parent company. Of course, gambling industries have been destroyed as well because guess what? There's nothing to gamble on. There's no sports. There's no horse racing. Casinos are closing because they don't want people gathering publicly. Yes, I am down 80% on this, but my personal belief is that once the sports leagues resume, once the horse tracks open back up, once the casinos open back up, I think this will be a good stock. Just wanted to point that one out. And of course, last we have Bitcoin. I am up on the day on Bitcoin, but over the past week, I am down 32% on that. Now down 43% all time. Like I said, I did buy some more. Quantity is now up to 7.86% of a Bitcoin. Average cost is down under 9,500. I always say it, this is a long-term investment. So still down 45% in the last month, 19% in 3 months, up 35% in the last year. and up 1,700% in the past 5 years. I will continue to repeat it. I think December of 2021 is going to be the peak based on the history of Bitcoin and the things that we know. But of course, opinions vary. Let me know what you think. I'll be back with a video towards the end of the week about the stocks that I think are recession-proof or really will fare well in terms of a global recession. So of course, subscribe to the channel if you like what you've seen, and let me know what you want to see next. Thank you.